Today's webinar is sponsored by Trio Markets. For your information, I was in Wall Street giving a training for one of the hedge funds in Wall Street last week, and I took the privilege to announce the results of the A to Z Forex awards from directly Wall Street Chargers Pool statue. It was quite an inspiring situation for the fact that we always talk about Wall Street by being there, not just by being there, by participating there and by training the hedge funds trading in Wall Street. Gave me the opportunity to communicate to many of these people who feel the vibe of Wall Street, the vibe of real financial markets on daily basis. And of course, they were interested in the knowledge that I have, while I was also interested in their daily experience that they have because of the difference in the experience that we had. It was a great opportunity for me. I got to talk about oil with some of the commodity markets traders of one major investment bank. Unfortunately, because of our non-disclosure agreement, I'm not allowed to share the direct name with you. However, this investment bank overall expects a dip in oil markets in 2016 before they see another rise towards $75 per barrel level. So you can see that there is some kind of negativity for the first half of 2016 by the big boys, in short. So let's go ahead and take a look at the market. I would like to look at the market on four major currency pairs. These will be Euro dollar, Pound dollar, USD Japanese yen, and USD Canadian dollar. So I will first start with the Euro dollar, just to give you an idea about the market, where it is going for and how it is going to be progressing from here onwards. I just looked at the market on the monthly time frame point of view and just connected some of the major support levels for me. I know I haven't just taken the lowest low over here, but you can also take that level. It's going to be relatively similar to what I have drawn so far. So at the moment, we see that the market is being traded very much close to its support level on annual support level, not just some support level. So that being said, as long as the market hasn't broken below the 1.0570 level, I'm not expecting another bearish run for Euro US dollar. This, if you look at it overall, you will see that this level has been a major support level. It's a dynamic support level, so it is a moving one because of the trend line, etc. that is involved. And overall, 1.05 level is a level that all the investment banks and all the hedge funds are keen on. There are some investment banks showing some signs that they are expecting the euro dollar level to go down towards 0.95 level. However, I personally do not expect the euro dollar to go to that level, because that would make things for the US extremely hard, especially for the fact that already China is devaluating their currency. It makes it for the US companies to export to China, and it makes it harder for the Chinese people, Chinese nationals, to buy stuff in the US. So when the Chinese yuan devaluates, it makes it harder for the US dollar to stay stronger. On the other hand, most of the devaluation of other third world countries and emerging economies all over the world is also happening because of the falling oil prices, which we'll come back to it towards the end of the webinar. So at the moment, my expectation is that As long as we haven't broken below the 1.0640 level, I do not even expect the 1.0570 to be tested, and I would be expecting the market to reverse from 1.07 level, and my target would be the opening price level of 2015, which was at 1.20 level. So we are looking at the more or less 1.20 level as our targets at the moment. So what else can we consider in Euro US dollar at the moment? There are a number of events happening in 2016. First and foremost of all, we are expecting to see the final results of the US rate hike, the Fed's rate hike, which is planned to take place in March. However, this rate hike should be lower than expected due to the Chinese events that we are seeing these days. I even shared my fundamental analysis earlier in the morning that how you could make the best out of the Chinese stock market halting event earlier today. So if the Chinese events are continuing this way, the rate hike should be lower than expected. So it should create kind of disappointment in the US dollar, and that in itself should lead the euro dollar to turn the wheel from bearish to bullishness, as we have already discounted the rate hike expectations for this year overall. So we should look for the breakout on the bullish side, and that breakout on the bullish side is just about the 50-week moving average. It's at 1.1060 level. If that level is broken above, we will be looking for the market once again breaking above the level that we just discussed and testing the 1.20 level, which is our major target for this year. I'll just also include a small Fibonacci analysis: 1, 2, 3, 4, 5, 6, 7, 8, 9. That's not the real one, but let's put this one on. So this is a monthly Fibonacci analysis that we can look for, and you see that the 161 level just falls at 1.20.60 level. So 1.2060 is the 161.8% Fibonacci retracement zone, and that is an overall major previous support and current resistance level for me at the moment. And the prior to that, the number one resistance will be at 100% Fibonacci retracement zone, which is at 1.15 psychological resistance level, and following that it's 1.16 110% Fibonacci retracement zone. So this is for the euro dollar. Let's take a look at GBP USD. I've again put the trend line for the support level on monthly. So as you can see, we have a very, very strong resistance and support level. Well, it has acted a number of times as a resistance and also at the moment as a support level, which is at 1.44 level. It is 200% Fibonacci retracement zone as well. So we are looking at this level as our main support level for this year. As long as this level is not broken below, we will not be looking for much further bearish movement. So if and when this level would be broken, our following target will be just immediately turning towards 1.40 psychological support level. So that would be my target for today. However, my expectation for the GBP USD this year would be overall at 88% Fibonacci retracement zone, which is at 1.5190 level, or you can round it up and say 1.52 level. So it makes us look for a range of approximately 1,200 pips market move for 2016. Fundamentally, we are looking for a number of events. We discussed about the Fed, but there is another element for the cable in 2016, and that's a possible Brexit. Brexit means Britain exiting European Union. So if this happens, we should be seeing some kind of disaster and chaos in the GBP USD. Of course, immediate result for it, for me, I believe it would be positive for the GBP, because the immediately people tend to find the bright sides, etc. However, overall, if that happens, we should be expecting a sideways market move after all, and it would possibly after 1 or 2 months of such incident, possibly it would be leading the cable further upwards, and I think it would. In such occasion, our targets would become at 1.55, 1.60 zone. That would be for cable. Let's also take a look at this pair on weekly time frame. We can see that the pair is trying to make a lower low overall. We had a wedge formation before, and that wedge formation has been broken below, and we can see the current support level with the trend line. That's the level that we are looking for. For those of you who are trading cable at the moment, I would assume